Bit of a recovery that you're seeing for the bank nifty, but the problem really is in the NBFCs today. So India Bulls Housing Finance still down around 5.8%, and a couple of other stocks which stand out is obviously what's happening with Ujjivan Housing. So if you can just touch upon that, that stock has recovered from the day's low, but still down around 5.8% for that one. IOC too, that stock is down around 5%, and SAIL from the metal space is trending lower, so down 4.8% for that stock. But let's move on to that exclusive which is flashing on your screen. Ujjivan may in fact look to list its small finance bank via a scheme of arrangement. Abhishek Kothari, who's breaking this story, is with us now. Abhishek, over to you.
Well, Ekta, as you said, Ujjivan may consider listing its bank via a scheme of arrangement wherein they will issue shares to the existing shareholders of Ujjivan. So about 60% of the bank's holding is what they'll issue to the existing shareholders in a proportionate manner. Now, that proportionate manner is not known and the timeline is yet to be taken. This can be an ROE depressive factor, that ROE can get tanked, and that is one of the reasons why Equitas, after the management clarified on air, took a beating in trade today. But this is a better corporate governance rather than, going out for public listing. This actually saves you, and it's a better corporate governance move. Just to alert our viewers, RBI license condition required Ujjivan to list its bank by Jan 2020, while they also have a requirement to bring down the promoter holding in the bank to 40% by Jan 2022. We wrote to the management of Ujjivan, and they told us that we have not yet thought of any specific direction or option in terms of bringing down the holding or listing the bank, and they still have time to consider various options. Equitas, in the board meeting which happened on 2nd of November, took a consideration of listing the small finance bank via a scheme of arrangement wherein they are offering the same manner of 60% to existing shareholders, and such scheme will not require a public offer. So take a note that Ujjivan also has a board meeting on 14th of November. Let's listen into the management of Equitas.
As per RBI, the holding company has to hold at least 40% in the bank locked in for a period of 5 years. That is till 2021. The remaining 60% is not required to be locked in and is available for sale. So we are looking at how do we work out a scheme of arrangement by which the 60% can be directly given to the shareholders or the holding company in proportion to their holding in the holding company's equity, through which the bank shares could also get listed. Whether we are able to do the entire 60% or it will be slightly less than that is something that the committee will have to come out and tell us, because we have to look at Companies Act, income tax provisions, as well as get various approvals. So that's the intent as of now.
All right, so that is as far as Equitas is concerned. Meanwhile, we're getting numbers from Good Luck India, and out there the net profit surge of about 63% is what has excited the street. So the stock has moved higher about 10.5% as we speak. Revenue growth of 27% and a net profit growth at a higher level implies that perhaps the margins have expanded. So that is a positive. Remember, the stock is off its 52-week high, so it is moving, seeing some sort of recovery also after a bit of a sell-off. But okay, so it looks like the margins have compressed, so the net profit may have another element because the EBITDA has grown at a lower level than the revenue. There you have it. The margins have compressed by about 70 basis points. Nevertheless, the street likes the net profit growth. But we still have Abhishek with us. Abhishek, big earnings, SBI, what is the street working with?
Well, the key focus, Mangalam, will be on the slippages or accretion of bad loans in a particular quarter. That was at 14,350 crore in the previous quarter, and analysts on street are working with a number of 14,000 crore even in this quarter. But how does the slippages come in will be the key factor to note. Now, in the previous quarter, 76% of the slippages came in from the standard portfolio rather than the watch list or the worrisome accounts that the bank has already given out. So this 14,000 crore will need to watch how the slippages arise. There are recoveries seen in the NCLT accounts amongst other PSU banks. So gross NPA, which was at 10.7% in the previous quarter, how that moves on account of the recoveries and upgrades will be seen closely. Provisions are expected to remain elevated on account of stress assets in the balance sheet and mark-to-market treasury losses, along with the fact that loan growth will be in single digits. The net interest margin on account of NCLT recovery and good low-cost deposit share should remain steady at an around 2.8% level. Our polls suggest NII growth of 14%, while the bank can report a net loss for fourth consecutive quarter at about 225 crores. Back to you.
Okay, all right, Abhishek, thanks very much for that. But let's move on to another exclusive now. Sources say that the Reserve Bank of India is said to have discussed prompt corrective action norms with the Finance Ministry before the rollout. Ritu Singh is here with the details. Ritu.
Well, you know, the easing of prompt corrective action norms for weak public sector banks has been a flashpoint between the Reserve Bank of India and the government, among the various other things, that are currently causing tensions between the central bank and the government. We understand that, any charges that have been levied by any government official saying there were unilateral decisions taken with respect to prompt corrective action norms may be inaccurate, because we've understood from officials in the know that at least 3 letters were exchanged between the Reserve Bank of India and the central government before the rollout of the prompt corrective action guidelines on the 13th of April 2017. The first letter, we understand, was written in early September 2016, where the Reserve Bank of India presented its view on the structural guidelines with which it would be revising the PCA framework. Thereafter, we understand that on 3rd March 2017, the government responded saying it was broadly in agreement with the PCA norms, but it did seek clarity on certain points, to which the Reserve Bank of India again sent out a letter to the government in which it clarified the points on which clarity had been sought, and said that it would be going ahead with the rollout of the prompt corrective action norms, which then subsequently was rolled out in the in mid-April 2017. So now to say that the government was not involved or not kept in the loop with respect to PCA norms would be fairly inaccurate.
All right, Ritu, thanks a lot for that. So